Prime Minister has told MPs that the government will not be reporting back on every twist and turn of the Brexit negotiations. In the first Prime Minister's questions since the summer break, more than 2 months after the EU referendum, Theresa May said that she was taking a considered approach and seeking the right deal. Later, she was pressed to clarify whether she wanted the country to remain within the European single market.
Please, could she tell us and clear up the confusion from yesterday? Does she value membership of the single market? Does she think it should be an aim or an objective of the negotiations and that we should be trying to stay in it if we can?
Well, I say to the Right Honourable Lady, is the aim that we have is to get the right deal in trade and goods and services with the EU. But this will be a new relationship. We will be looking to develop a new model of the relationship between the UK and the European Union, and we will not, as I said earlier, be setting out every bit of our negotiating hand in advance of entering those negotiations, because that would be the best way to come out with the worst deal.
Prime Minister there speaking earlier today. Well, the economic risks of a Brexit vote were not exaggerated by the Bank of England, according to the Governor, Mark Carney. He was answering questions from members of the Treasury Select Committee today. Mr Carney said he was absolutely serene about the bank's actions and stressed that the recent cut in interest rates, part of an emergency package of measures, was working. Our economics editor, Kamal Ahmed, watched the exchanges.
The message was clear. A slowdown, possibly a recession, if Britain voted to leave the European Union. Before the referendum in June, the governor was in warning mode.
Of course, there's a range of possible scenarios around those directions, which could possibly include a technical recession, could possibly include that.
Now, after the bank cut interest rates and some positive economic figures, Mr Carney was talking not of gloom, but of success.
I'm quite comfortable with the analysis we did in advance, the preparation we did in advance, the effectiveness of the contingency measures, all of which put us in a position to help this economy adjust and to help make, if I can bring it back to the issue which is at the heart of the referendum, is to help make the leaving of the European Union a success as quickly as possible.
But that wasn't enough for some. With almost icy politeness, Jacob Rees-Mogg, a Brexit backer, laid out the charge sheet against the bank.
The Bank of England was contributing to a fear in the markets about what would happen in the event of Brexit, which it is now saying that it has corrected. And that seems to me to be at the heart.
We were, Mr. Rees-Mogg, we were absolutely clear-eyed about risk. That's our job. We're charged by Parliament to do that. The next step is not just to observe risks, but is to take steps to address them. We have done that. We have made the crystallization of those risks less likely.
Mr Carney said he welcomed evidence of an economic bounce back, and the markets seemed to agree. As a barometer of investor confidence in the UK economy, the value of the pound against the dollar is a pretty good guide. Before the referendum, sterling was riding high. £1 was worth $1.50 on the markets. After the Brexit vote, the pound's value plunged to $1.28. Good for exports, not so good for imports, such as food and energy, which become more expensive. Since then, the pound has seen some volatility and then strengthened to $1.33. Investors are feeling more confident as the threat of a recession has receded.
The UK has held up pretty well after the Brexit referendum, but growth is not strong, it's weak. A lot of confidence indicators are pretty weak, and if we look ahead, I think there's still some Brexit pain to come, maybe as we trigger Article 50 probably next year, and as inflation picks up and squeezes consumers' real income.
The cheers went up just 76 days ago, but major questions remain about the referendum fallout. What trade deals will the UK strike? What about tax and spending policies to support the economy? The answers will take months, years to become clear. Kamal Ahmed, BBC News.